Let's talk about Spicejet. I would never invest in a company like Spicejet, and I will give you 7 reasons why I have not bought shares of Spicejet. Basically, the airline business is something that I don't like, but let's talk about the 7 specific reasons why I have not invested in Spicejet. Number 1, it has produced a negative operating cash flow in the 4 years out of the past 11 years. So if you look at the 11 years of history of the company from 2011 till 2021, out of those 11 years, in 4 years, they have produced a negative operating cash flow. What is operating cash flow? Whatever the company is making from revenues minus all of the expenses, like you have to give salaries to employees, you have to do advertising, marketing, you have to pay taxes and other expenses like legal expenses and things like that. After deducting all of the expenses of the company from the revenue, whatever is left out in cash is called as the operating cash flow. And out of the past 11 years, for 4 years, the company has lost money, which means the remaining 7 years gains have been eroded because of these 4 years. That is reason number 1. See, if a company cannot make operating cash flow, how can it make free cash flow? And we want to look for companies which are making free cash flow. After deducting the capital expenditure, interest payment and loan repayment from the operating cash flow, what you get is the free cash flow. And if the free cash flow is positive, then there is something on the table for shareholders. That is not the case with Spicejet. On the operating cash flow level itself, there is a big problem. Number 2, if you look at these 11 years, 2011 till 2021, out of those 11 years, the company has reported losses in 7 out of those 11 years. Why would I invest in a company where almost every year it is reporting losses? The company itself is telling you that we are making losses. Okay. There is a difference between cash flow statement and profit and loss account statement. Profit and loss account statement, at least the company can prepare based on its discretion. Okay, that is the word that I would use. A lot of companies fabricate the profit and loss account statement, but there is some management discretion when you prepare the profit and loss account. But cash flow statement, you can't mess around with the cash flow statement because it's the real money that is coming in, money that is going out. So cash flow statement is like before makeup photo. You know, when a lady goes to a beauty parlor, before makeup photo, that is cash flow statement. And profit and loss account is the after makeup photo. Okay. So it's a made up statement. So I never focus on the profit and loss account for this reason. And in the profit, if the after makeup situation is not good, then think about what will be the situation before makeup. Okay. So 7 out of the past 11 years, the company has reported losses. Number 3, out of the past 11 years, 5 out of those 11 years, the company has reported no operating profit. So it is making an operating loss. See, there is gross profit, then there is operating profit, then there is net profit. Forget about the net profit level. At the operating level itself, the company has lost money for 5 out of the past 11 years. So net, the company has not made any money. That is the 3rd reason. No operating profit. Number 4, negative net worth. The company has got negative net worth. What is net worth? Net worth basically means the book value of the company. If you sell off all the assets of the company, whatever money you get, if you use that money to pay the liabilities of the company, whatever amount is left out, that's the effective net worth of the company. And this company has got negative net worth, meaning even if you sell all the assets, the amount of money that you raise is not enough to pay the creditors. So it's a very distressed situation for a company, which is why the company is selling for less than 3,000 crores, which is, I think, less than $500 million. An entire airline in a country is selling for less than $500 million. That's a very low market capitalization for a company. Number 5, disputes and litigations. See, when a company is facing disputes and litigations, it occupies a lot of management bandwidth. The management is busy sorting out these issues. The management is busy troubleshooting rather than focusing on the growth of the company. The nature of the business is such that it doesn't allow the management to grow the company. There are tax issues, there are cost related issues. So these are the things that hold back a company from growing. So I don't like such companies. Number 6, the airline industry, historically, if you see the past 100 years history, Warren Buffett has also said that airlines don't make any money at all because it's a tough business, it's a capital intensive business, the costs are very high, and consumers always want the prices to be low, which is the reason why it puts pressure on the margins. And you can see how many years the company has been reporting losses for the past 11 years. And the market understands this. So I don't invest in airline stocks due to this reason. And it is not just Spicejet. If you look at other airline companies in India, even the good airline companies, it has reported a loss in the recent year. I'm talking about Indigo, which is Interglobe Aviation. Look at the profit and loss statement, the latest one. I am recording this video in May 2022. So if you look at the latest P&L, I think they have reported a loss. I remember looking at that. Number 7, there is something unusual I saw when I was looking at the financials. The long-term debt of the company has shot up 9 times from March 2021 to September 2021. So it was like 1,000 crore in March 2021. And in September 2021, it's 9,000 crore. I don't know. I have not gone into the details of why this has happened. But whatever it is, I mean, I don't want to invest in a company that is reporting such numbers. Okay, 9 times the debt goes up within a period of a few months. I don't like that. So just to summarize these 7 points why I have not invested in Spicejet. Number 1, negative operating cash flow. Number 2, loss-making company. Number 3, operating losses. Number 4, negative net worth. Number 5, disputes and litigations. Number 6, airline industry is a loss-making industry. Number 7, long-term debt has shot up 9 times. So that is the reason I have not invested in Spicejet. If you have invested in Spicejet, or if you are thinking about investing in Spicejet, my question to you is, have you looked at all of these factors? If not, I have tried to give you another perspective on this company. Thank you so much.